Hiya, I'm Connor Moody from Property Week, and today we are speaking to Alan Harber. Alan, thank you so much for joining us. So we're hearing that in commercial real estate, that investment will be increasingly defined by the quality and not the scale. What does that mean in practical terms for investors?
Yeah, I think it's a really good question. So we've definitely seen in the past a push towards volume of assets and class. We're now seeing a real push, as per the question, around the quality of the asset. And instead of being broad brush, they're definitely looking a lot more specific around certain asset types and classes. Obviously, more than happy to cover some of that as we chat through, but investors just have to be thoughtful around the quality of the asset, the underlying tenant, the strength of any covenants, and the broader property, rather than just being attracted by the price and the yield. There's a number of factors that we need to consider, and we're finding the markets demanding that people start to look a lot deeper and do a lot more research. That's not to say that people aren't buying at auctions, but the due diligence ahead of any purchase is absolutely key to the investors making informed decisions that are there for the long term rather than what could have been a short-term gain.
Lovely, thank you very much. So it's a bit of a deeper scope into not just the surface level stuff.
Absolutely. You can't just take it on value, run it through a spreadsheet, see what the return was, and then move on. There was a time that was possible, but very quickly we're finding that the colleagues or the clients, that have made those decisions have started to come across some obstacles in terms of the energy efficiency of the building and the longevity of the leases that are attainable for the building over the long term. And that's where we see real value in the market going forward.
So what key fundamentals should investors focus on when assessing the resilience of an asset in today's market?
So there's a number of key ones there that we suggest that investors review and look at. One is the energy performance of the building. The reason for that is, as an investor, it will help should you be at the point of resale in 5 or 10 years' time. The market's certainly moving in the direction of assets being greener and the energy efficiency being one of those key metrics. Also, tenants are far more selective around the energy credentials of the building that they operate, and they may well want to use that for their own purposes in terms of their own green environmental awareness. So properties at the very highest end of those EPC or BREEAM ratings are the ones that we see some of the biggest demand for. That's not just in the commercial sector in terms of warehousing, but also in the office space. So it's something to be aware of and definitely thoughtful. The other things that we'd ask people to think about is location. I know there's many programs on that, but it's really, really key. The location of the building is in the right place for that kind of asset. So if it's warehousing, it would need to have strong transport links. If it's office based, you might want a station nearby as people move away from cars and move towards public transport. How easy it is to access is one of the key parts. Obviously, as we've gone through COVID, working from home's now moving forward, people are back into the offices, maybe not at the same volumes that we were seeing pre-COVID, but we're definitely seeing demand for people face-to-face collaboration, working together. It's just a nice environment for people. So we're finding that tenants want to make sure that their colleagues can access the building easily and quickly to make that environment the best they possibly can. So those are a couple of the bits that we'd definitely look at.
So it's almost like selling the lifestyle, not just the asset, right?
Absolutely. It's got to fit for you. When you think of your own private home, you didn't buy it just because of the returns. You buy it because you want to be there. And we're finding the amount of time that people spend in the office, that's one of the key factors, is they want to be there. There may well need to be gyms. There may well need to be bike storage. All of these things that maybe we didn't used to look at as being important when we were considering a commercial purchase, now very much is. And I think the office space is one that we've seen transform, move forward, and adapt as we look for new ways of working. I think we can all appreciate we're working differently, perhaps as we did 10 years ago, and our office space needs to adapt with that.
And how are market dynamics and financing strategies evolving?
So we're definitely seeing financing strategies change as we go forward. A number of lenders are looking to attract the very best assets. As I spoke about, sometimes the best asset, one of the ways we class it is via the energy performance. We definitely have a number of products available that when you meet A or B, EPC and a number of other criteria, we'll actually waive the arrangement fee for the loan, which puts us in a unique place in the market. A number of lenders aren't in that space. That's because we really value the quality of the building. We also see warehousing continue to evolve. The need for well-positioned, efficient warehousing continues to grow. And the retail high street is still very much alive and bustling. Of course, it's relocated. There's hubs, there's centres to towns. But the very best retail space is still in high demand. But you definitely need to be thoughtful around some of the secondary use for that retail space and the larger retail spaces. Obviously, you start to narrow the number of tenants that would be looking for properties of that side. So could it be subdivided? Is there secondary use for it? But as long as it's well located, we're finding the demand continues to be strong. So the market and the funding is moving fast paced. Obviously, a number of lenders want to be part of it, but our experience of colleagues able to support our clients, both new and existing, at key moments is one of the things that we find definitely clients appreciate. They're looking for us to continue to evolve. So we really are just looking to find ways to make that purchase as seamless as we possibly can. One of the ways that we've done that is through product innovation. And one of those products is something that called a buildings transition loan. So this is a loan that attracts a 0% arrangement fee for just the very best quality EPC rated A and B properties. Now, there are some other criteria that, as you'd expect as a bank, we'd say subject to terms and conditions, but we are finding that supports a number of clients in enabling them to make a purchase with us without paying a lender's arrangement fee that some find very attractive in this market. So it's not for everybody, but we are finding it's helpful for a number of clients.
And so looking ahead to 2026, what do you see as the biggest opportunities and risks for commercial real estate investors?
So the market has a number of landlords looking to either acquire or sell. And I think that's the opportunity. The market is evolving the whole time, both around secondary use for properties, maybe looking at residential opportunities on the back of what was traditional commercial. So the risk is embedded with the opportunity in terms of you need to be thoughtful around that tenant. I can't go through that one enough. We need great tenants that have got the longevity. So if they're willing to pay a rent on day one, that's great, but can they pay it in year 2, 3, 4 and 5? And that's some of the due diligence that we're finding is required. So again, could be a risk. Another thing that you need to think about is the location. Do the homework, make sure it's in the right spot and that it fits the profile of the target purchase that the client's looking for. And if all of those meet, alongside some great funding options, and also I think the landlord has to be invested in it. I think we spoke earlier about it needs to be a bit more of a purchase rather than just for yield, but for the longevity of the landlord's plans going forward. And if it fits their portfolio, then I think it's as good a time as any as we go into 2026.
Well, thank you so much, Alan, for joining us today.
I've really enjoyed it. Thanks very much for the opportunity.